we're going to go ahead and get things rocking and rolling here. It's been quite kind of a quiet evening as far as trading goes. Kind of took my profits and ran yesterday. There's still a couple of things that I'm looking at here today, but overall it's been rather quiet since the last real. Well, I got stopped out on my dollar Swiss for a slight profit because it never made the amount of headway that the euro dollar made to the downside yesterday. Otherwise, we would have been in good shape on that trade. You might still be in that. There's nothing wrong with being in that dollar Swiss right now. It's it's been sideways for so long. It's still in this holding pattern right up in here for some reason. It had been acting as one of the weaker currencies, but now not so much. Meaning, yesterday it didn't quite have the amount of weakness. Like you see, the euro had this big spout of weakness right in through here where it dropped almost 100 points. Swiss went through the same thing. It got weaker, but it only moved about 50 points. So we didn't quite get the volatility move or push on the Swiss that we would want. Yen keeps getting weaker right in through here, which is another, that was one of our trades from yesterday, is trading into yen weakness and dollar strength. One of the more surprising things is one of the trades that we were looking for yesterday, and I had this set up actually until the overnight hours, essentially. I canceled it this morning because it broke through the 100% retracement here on the pound. I had it set up because we were looking to trade this 78.6% retracement, but yesterday we wanted a little bit more confirmation, so we were just waiting for it to actually bounce and make a break out of this sideways pattern here. So we had an entry to sell it if it broke down through this low, which you can see never happened. And then it ended up going up and breaking through the 100% retracement level. So that takes this out of play, this retracement right in through here. Essentially what you have to do at that point is you got to kind of back up and go to where the previous high was. Got to go all the way back to the beginning of May. I'm still what I would consider myself to be still pretty bearish on this pound. Yesterday we didn't get a sell on it, so it was a no harm, no foul, and we were using pretty good confirmation. I think if it would have dipped below that price, that it could have come down a little bit more. But now we see that it's come up past the 100% retracement, so that puts like this 47.75 level in play. What I would actually look for here, and I haven't given up on this pound. I've just been a little bit more cautious in how I approach it. I haven't given up completely on selling it, but I just want to, now it just changes the rules around a little bit as far as what I want to look for. You can see it's just now hovering right at this 4,700 level right in through here. So today, much like yesterday, I'm willing to take a shot on this. However, I would like to see, now that it's above 4,700, or it's gone above 4,700 level, if I can just get a close below the 78.6 level, I'll be willing to give it a shot to go short on the pound today. I think this is really, in my mind, I think this is a lot of just the movements that are happening here are based more on that correlation we talked about yesterday between the pound and the euro, not necessarily the pound really getting strong, which it has been getting strong, don't get me wrong, but I think it's due for, at least if people are buying into pounds, at least a little bit of profit taking or some type of reversal here. So if it closes below the 78.6 level, I would most certainly be looking to sell this. And for PitView, you really you'd be looking for like a -5 on that, on the PitView indicator, if you're using that as confirmation. I don't have that up right now. I guess I could pull it up here just so I don't have to take away the bandwidth here. Yeah, you can see it's, it's still been making kind of a divergence from this overall trend right in through here. It hasn't really quite broken out higher. It's just been going lower. It's been kind of diverging from the overall trend. It's already gone kind of negative right in through here, but I would wait for it to go -5 for your confirmation. Put your stop. I'm not really, well, I think the 78.6 level is the better level to look at. You can look for a close below 4,700 now that it's bounced up above it, but I'd rather just wait for it to come back below the 78.6 level, because just looking for a little bit of additional confirmation on it, because it might, there's always a chance for the whipsaw if we get in too fast on these trades. So I would use that 78.6 level. That's about 25 pips below, and I think you would still have a shot at capturing. As long as it doesn't come up, keep driving itself up. We're looking for a reversal. It keeps driving itself up, and of course, if it breaks through the 100% retracement, then we're not going to have any trade there. And then look for a limit of 1 to 1.5 risk reward, or limit 1, limit 2. Same strategy as yesterday. We've just changed around the retracement level that we're looking for. There we go. So got that one working right now. As far as news today, it's the only real significant news today is the Bank of Canada interest rate announcement comes out at 10 a.m. The expectation is that the Bank of Canada is going to leave rates on hold at 0.5%, so leave rates unchanged. The speculation coming out of Canada, it's going to be all about their statement, as far as just like our Fed, their accompanying statement with the interest rate announcement. Not really expecting much here as far as, from the Bank of Canada standpoint. We have oil that's been coming back up into play. They've had some mixed economic numbers, but overall, it seems like they're rebounding quite nicely as an economy. There was speculation at one point that they could conceivably lower their interest rate, but I think that's gone out the window now. I don't think that's going to happen, even though there have been some commodity currencies that have made some surprises at some points. But I really don't expect them to be coming out with really any surprises with this interest rate announcement. I think the only what I would look at here is, I think that with the Bank of Canada, the majority of expectation is that they're going to be more, they're going to err more to the hawkish side of things. With our Fed being a little bit more hawkish, and with like I said, rising oil prices, the economy seems to be recovering or rebounding quite nicely. Most people are expecting them to be more hawkish, and that should, the Bank of Canada interest rate announcement should conceivably favor the dollar, or favor the Canadian dollar, sorry, favor Canadian strength. So let me go down here to the bottom. I do have a trade that I would be willing to take here on the Canadian. And it's right here at this swing low. You know, we were looking at that 3,100 level yesterday. We did get a close below it, swing back to the upside, came down almost to that same level, bounced right back off of it. In the afternoon class, we said to, you know, probably wait until after this low gets breached before getting into the trade. Post Bank of Canada, I still like the breach of this low after 10 a.m. If you can get a breach of that low, I think that this interest rate announcement should probably favor Canadian strength. So you could even put in a, you know, if you're using PitView or some type of other indicator, I think that if it comes down and breaches that low on your sell entry, if it just breaks that low, you could even put it as a sell stop like we had yesterday, then I think it would be a good one to get into today. You could put your stop right up above the swing high. Oil's up today, or you could go 50 max on that. But the swing high is only about 1.31323, so yeah, that would put you at about 50 pips anyway. And you could look for a limit of 1 to 1.5 risk reward on that also, I think. Or you could go limit 1, limit 2. I don't think it's going to be a huge surprise to the market if the Bank of Canada is more hawkish. But, you know, anytime there's more of a hawkish central bank, you know that it's, you know, even if that's built up into market expectations, then chances are it doesn't mean that the Canadian won't get strong. What I mean is some people buy into that whole buy the rumor, sell the news type of speculation, that if things come out in line with expectations, then oftentimes, you know, it doesn't really make a huge bounce. But in this case, I think that, you know, it should favor Canadian strength. And hold on one second here. Euro pound, yeah. Let's see. Somebody wanted me to look at the euro pound here, taking a short as it closed below this 7,600 level. Obviously, it's been in a downtrend, driven by the pound strength this week, has been driving this down right in through here. You know, it broke through a key level. You can see this kind of, I looked at this yesterday on the daily chart. Euro pound had this longer term head and shoulders top level right in through here. The only thing I would see wrong with this trade, and there's nothing wrong with that trade, it broke through a key level. It's looking good. It's looking, you know, quite bearish as far as the euro, and you know, you're looking at pound strength, so you're trading into this right in through here. You're actually on the flip side of my equation today, which is not a bad thing. You know, even though I worked with Jimmy Young for so long, I didn't always trade along with Jimmy. Sometimes I was a contrarian Jimmy trader, you know, even when I worked with him. So what I mean by that is just because Jimmy would trade one way didn't mean that I forced myself to. But, you know, you're looking at this pound here, and you're actually, if you're short euro pound, you're looking for kind of the opposite of what I am today. you want this pound to actually go up and breach the 100% retracement. You want this to continue going up. If you're short euro pound, if you shorted the pound dollar, by the way, you'd basically be short the euro dollar. You'd kind of be taking the pound out of the equation on that. Because if you're short euro pound, you're short euros and long pounds. And then if you were to take this short on the pound dollar, you'd be shorting the pound at that point. So you'd be long the pound and short the pound, and that would essentially make it to where, you'd be looking for the euro to be coming, you'd be short the euro net. You'd be looking for this to come down further, because that would be you'd be looking for pound to go down, which would cause the euro pound to go up. So you'd be essentially looking for the euro to be the strongest, the weakest currency today, and make a large precipitous move down. But if you're short euro pound, you actually want euro to go down, and you want this pound to continue going up. That's your trade. You want this pound. That's not the trade I'm looking at today, but that's where you're at. You're long the pound, so you want that thing to go straight up. You want it to continue above that 4,700 level, and you want this euro to keep going down. And if the euro goes up and the pound goes down, well then, that would be what would stop a trade like that out. I'm going to switch gears here to another dollar weak position, actually, on this dollar yen. It's not necessarily made any type of trend line, but you can see it's making a nice little 78.6% retracement right up in here. I think this is a pretty easy one as far as looking for an entry, because the 110 level is, I'm not really looking at the markets are expecting to be up today, but I'm looking right here at this 110 level. So I'm not really, this is not a huge amount of risk if you look at it. I mean, that's only about 30 pips away. So another one that would be a nice confirmation trade, that you'd have to be a little patient on. If we were to get a sell-off in stocks today, or Asian stocks were up big, European stocks are up big, U.S. stocks are up big. But if you were to get a sell-off in those higher yielding assets today, that could conceivably bring this yen down, or the dollar yen down, meaning dollar weaker, yen stronger. That would give you, a large amount of room to go to where, if you used a 1 to 1.5 risk reward, there we go. The Bank of Canada is really the only big news coming out today. So there's really not a whole lot of fundamentals that would get in the way of your trades today. except for, of course, if you're looking to short dollar Canadian, that would certainly drive you into a potential sell trade on dollar CAD. There we go. And that's kind of it as far as what I'm looking at here. I mean, it's, you know, I've been looking at, you know, like the euro right in through here. I mean, if we're looking to short the pound or short the euro, you would think one or the other would have to make a break today. You know, you see the euro has been steadily making lower highs and lower lows right in through there on the daily chart. And you can see how consolidated it's been overnight since coming down to the lower edge of this 111 level. It's got plenty of room to drop down further. You know, the other thing that you could consider here on the euro dollar, since it has been so consolidated for dollar strength, I'm kind of going to switch, because the euro was much weaker than the Swiss yesterday, I'm going to switch between those two. But when you look at the high right in through here, 1.11571, it's only been in a, it's like been in a 26 point range throughout the day. I mean, that's not a huge amount of, that is tightly consolidated here on the euro dollar. You know, this is on the euro USD pair. That's a tight consolidation range that it's been in. So much like the pound, you know, you can see this one's starting to break down a little bit, but it's also been just ebbing and flowing between these levels. Pound is actually broken up a little bit further than the euro is broken down, but I think it's, you know, you could look for a sell entry at a close below that swing low or break out of that consolidation. It's already going like -5. It's already kind of turning here. But you'd certainly want to wait for that consolidation break to occur. And then you could put your stop. Your stop would only be 20 something pips away. So you could, you know, you could be out of this trade before it hits the 111 level. Let's see here. And for this one, I would go for a 1-to-1 risk reward. Or you, and if you wanted to, you know, if it does break through 111, you know, it can go down further. I would focus more on taking the first profit level off at a 1-to-1 risk reward, maybe for a shorter term play today, if it breaks through that consolidation, because no matter which way the euro breaks, it has plenty of room to run, either up or down, because it's been in such a tight range over the last several hours, over the last 16 hours or so. It's just been in this very tight range. You could actually look to buy it if you wanted to. If you wanted to use it for a dollar strength trade, you can just essentially treat it like trading London momentum in either direction on the euro. You know, sell it if it breaks through the low, buy it if it breaks through the high. Not a bad idea. Like I said, everything's kind of mirroring yesterday a little bit as far as, you know, the markets go. Markets are expected to make a nice little open to the upside here this morning. Almost all of these trades you're going to have to wait until after 10 a.m. to get into. Let's see here. There we go. So I went ahead and saved that handout. So there you go. There's your handout for today. That's attached. That's about all I got. I think that puts us in a pretty good position as far as looking, what to look for here. Definitely going to wait till after 10 a.m. to place any trades on any of these, but that at least gives you several choices of what to look for in either direction, dollar strength or dollar weakness. So we shall see. So that is all I have here for today, folks. I'm going to go ahead and log out. Trade careful, and I will chat at everybody later. Thanks for coming in, everyone. Bye-bye.